Question number 1 is written as follows. The following balances were extracted from the books of T PLC after the preparation of statement of profit or loss for the year ended 31 December 2024. Then after the balances, it is written as follows. Retained earnings include a draft profit figure of 104,800. However, it has been discovered that some errors had been made when preparing the statement of profit or loss. So we have a draft figure of 104,800. And below that, there are 5 errors. On the next page, it is written, calculate the revised profit for the year ended 31 December 2024. So in order to calculate the revised profit, the draft profit prompt has already been given to us. In this box, you need to show your working, and it is possible that I may not use it because for the teaching purposes, I will do the working next to the errors themselves. But you must use this box. Well, this is a 7-mark question. Let's move to errors. Error number 1 is written, the closing inventory had been overstated by $4,500. Because of this overstatement of closing inventory, a higher amount of closing inventory was subtracted, causing gross profit to be higher. And as a result, net profit also became higher. This means that the draft profit should be reduced. So in order to find the revised profit, we will subtract this overstated amount of 4,500. Okay. Therefore, let's write here less overstated inventory 4,500. Right. Error number 2 is distribution costs included the total cost of a 9-month advertising campaign for $32,400, which will end on 31 May 2025. This means that these advertising expenses of 9 months related to the period up to 31 May of the next year. But according to the matching concept, only those expenses that belong to 2024 should have been shown in the income statement, and which amounted to 14,400. However, the error was that instead of showing 14,400, the entire 32,400 was recorded, resulting 18,000 as prepaid expenses. Okay, this means that an amount of 18,000 was subtracted in excess, which caused the draft profit to be understated. Therefore, to find the correct revised profit, we'll add back this amount that was mistakenly subtracted. So let's write here, add prepaid advertising 18,000. Okay. Error number 3 is furniture and equipment had been depreciated by 15% per annum using the reducing balance method instead of 20% per annum using the reducing balance method. Okay, well, this is a very simple matter. Instead of charging depreciation at 20%, only 15% was charged, meaning that less depreciation was charged. To correct this, we will charge an additional 5%. Okay, let's see what the amount of this non-current asset is. It is written here, furniture and equipment at carrying value. The actual issue for some students is definitely hidden here. Carrying value means net book value. This means that this amount of 442,000 is the amount after applying the wrong depreciation rate of 15%. So first of all, we need to find the amount on which 15% was applied, and then subtracted to arrive at 442,000. This amount is actually the 85% of the original amount. If we divide 442,000 by 85%, we get the actual original amount that was before depreciation. And this is the 520,000. Okay. Now applying 5% on this original amount actually gives us the depreciation of 26,000. And this is the amount that was not subtracted, which caused the draft profit to be overstated. Therefore, to find the correct revised profit, we will subtract this $26,000. So let's write here less depreciation of furniture and equipment 26,000. Okay. Error number 4 is debenture interest is payable every half year. No adjustment has been made for the payment due on 28th February 2025. Well, interest on debenture is charged at 8%, which means that it is the 8% of 150,000, and that is equal to 12,000. Since it is paid twice a year, it means 6,000 is paid at one time and the same 6,000 is paid at the second time, right? Among these two dates, only one date, I mean the 28th February, has been given. So the other date will be exactly 6 months later, and which is 31 August. However, the financial year of the business ends on 31 December 2024. The statement no adjustment had been made for the payment due on 28th February 2025 means that this amount relates to the time period from September 1, 2024 to February 28, 2025, which has not yet been paid. It is very important to note that from 1 September 2024 to 31 December 2024, there are only 4 months whose interest expense has not been shown. Following the accrual concept, the amount of this accrued expense is actually 4,000. In reality, because this expense of 4,000 was not shown, the draft profit became overstated because of this. Therefore, to find the correct revised profit, we will subtract this amount. So let's write here less debenture interest 4,000. Okay. Last error number 5 is written no provision had been made for taxation of 14,800. Another very simple error. This means that the tax expense was not shown. I mean, this expense was not subtracted, which caused the draft profit to be overstated. Therefore, to find the correct revised profit, we will subtract this amount. So let's write here less taxation on profit, 14,800. After adding and subtracting all of these amounts, the correct profit for the year becomes 73,500. I hope you have understood. The distribution of marks is given somewhat like this in the mark scheme.